rising inflation is evil for our savings because the dollar in your bank account is worth less in a year's time. It's currently worth 8% less, which is quite a lot. And so it's this weird situation where we have to take the pain. We're told we can't buy as much, and we're forced into it by rising our mortgage costs and our food costs and all of this stuff. And eventually, things will slow down. People will be put out of jobs a bit, that kind of stuff. And then the overall demand in the economy comes down and prices come down. So we're all collectively taking the pain for this inflation that was created out of a whole bunch of different things, from the pandemic through to supply chain issues, through to underinvestment in commodities, through to the shift to green energy. All of these things have created this moment in time, which is tricky. And if we relate it to, for example, the crypto market, so why did crypto stop going up? Well, it was macroeconomic factors, and people are like, well, what's that got to do with crypto? Well, really simple is it's a retail-based market. And about sometime last year, prices started to rise. And so people could afford to dollar cost average less. So then there's less demand for crypto and the price of crypto falls. It's as simple as that.
The world's largest and most popular cryptocurrency was trading more than 5% lower at $18,644. The global crypto market cap today fell below the $1 trillion mark as it was down over 5% at $986 billion. Hello and welcome to Money Talks. In today's video, Real Vision CEO Raoul talks about the importance of timing in the crypto market, how to prepare for a global recession, his thoughts on Bitcoin's price crash, and the reason behind Bitcoin versus Ethereum constant comparison.
So there's a mythology of investing. The mythology of investing is hedge fund manager George Soros spots the opportunity, gets in at the right price, makes a fortune. The reality is most people have no idea where the price is going over a short term. So what happens is you buy something, you put all your money in, you've saved up your $5,000, you put it all into Bitcoin. Bitcoin falls 50%, you panic, you sell it. You feel terrible. Bitcoin goes back up again. You feel even worse now. You can scrape together. You've lost half of your money now, and then you keep compounding these errors, right? It's called market timing, and market timing is extraordinarily difficult. I do some market timing because that's been my job. And 30 years, I've done more than my 10,000 hours, a lot more than my 10,000 hours, and that doesn't make me very good at it either. I'm not bad at it in long-term investing. I'm terrible at short term. So what is dollar cost averaging? Dollar cost averaging is basically what everybody does with their 401k. The problem is with 401ks or retirement funds is nobody cares about them. You don't know what's in it. You have no ownership. You just put some of your salary away and it goes in this mythical thing that you probably assume won't be worth as much money as you hope it is. That's what that's become. And you put it in every month. Why do you do that? Well, because you're averaging all of the highs and lows over time, because markets tend to do this. So you're kind of indifferent. In fact, you love it when it falls because you're buying more units at a lower price, because your game is to own as much as you can at the lowest possible price. But if you don't know how to market time, and 99.9% of people don't and can't and shouldn't, then you just average in over time and magic will happen. You just average a beautiful price over time. And had you done that in the S&P or anything else, you'd make money. Now, what's so lovely about Bitcoin is it's not a passive investment like your retirement fund, because a retirement fund you can't access until later. So you kind of write it off, and everybody's heard that it's never going to be worth as much as it should be anyway. So it's become a bit of a pain as opposed to something. But this you own. You live and breathe that volatility, and you live and breathe those gains when they happen. And you will be like wide-eyed. I did it to my sister-in-law, forced her to do this. I said, listen, I'm going to make it easy for you. Just go and open a PayPal account and start that way. And she had some savings. She could take out of another thing. She had like $5,000, $10,000, and she put it in, and we got the timing relatively right. So it shot up a lot. I think she got in about 13,000 in Bitcoin. And it
Whoa.
shot 17,000. Yeah. And it shot up a lot. So she's like, wow. And then it falls a lot. And she's calling me up saying, what do I do? Should I sell some? I'm like, no, you keep putting in part of your paycheck. And after all of these falls, these several falls, she starts to really understand. And when they start falling a lot, she starts doubling the amount that she would have normally invested. And now she's taught herself to invest. Next thing I hear, oh, well, I bought some Ethereum. And this is how I'm dealing with that. So she's now looking at two different things. And she's now thinking about the asset allocation. What's going to outperform Ethereum with Bitcoin? She knew nothing about this stuff. This is a year and a half. And she now understands because of that dollar cost averaging and taking ownership that you, exactly as you said, once you actually own something, that 401k, you don't actually really own. It's like some other guy does something with it and hopefully he makes money. This is you. You're taking responsibility for your own finances. That's so empowering.
Bitcoin plunged below the $19,000 level as investors are moving away from riskier assets. This is the weakest level Bitcoin has seen since July 13th. If the selling pressure continues this way, the next level could be $17,500. The second largest crypto, Ethereum, surged early Tuesday but fell nearly 7% in the past 24 hours. One of the reasons for the downward trend could be because of the long US Labor Day holiday weekend.
And we have no idea whether it went on Bitcoin rails, XRP rails, Ethereum rails. And guess what? We don't care. I promised you $1. You want to get the dollar instantaneously. That's interoperability. That's all coming. So this is what Ethereum is about. It's the magnitude of this network where everybody's developing everything on top of it and it's scarce supply. So it's seeing an even faster adoption rate than Bitcoin now for the reasons that seem pretty clear because it has more use cases than currently the Bitcoin blockchain does. Doesn't mean Bitcoin blockchain can't in due course, but right now there's a lot more use cases in Ethereum. It's super exciting.
On the other hand, Ether, the coin linked to the Ethereum blockchain and the second largest cryptocurrency, tumbled nearly 8% to $1,502. Ethereum is transitioning to proof of stake for its consensus protocol. The latest upgrade to the Ethereum network, known as Bellatrix, was activated on September 6, 2022. It officially kicks off the blockchain's transition, known as the merge from proof of work to proof of stake. The proof-of-work mechanism requires powerful computers called the miners to secure the network and earn rewards in Ether.
No, I think its value proposition stands above all things. It is pristine, it's pure, it is what it is. And the way it's so impossible to change any of the attributes of Bitcoin makes it a bit clunky. And that clunkiness is its beauty. It is so secure. It's the most secure of all protocols. So let it be what it wants to be. Now, people are building things like the Lightning layer, which allows you to do lots of fast payments over the top. Maybe that scales. Maybe it doesn't. Doesn't really matter. That store of value for every person to think of, like it's owning a piece of Manhattan real estate at low prices, that's never going away. Not in the conceivable future, because humans have now said it has value and it's being adopted very fast. So, no, Ethereum's a very different thing. It doesn't compete. That's how I like to think about it. And unfortunately, when you go online, people will tell you, well, it's competing and it's not as good. You have to ignore all of that and look at the whole space overall and say, and just be honest, saying, we don't know where this is going to be in 10 years' time. And like you say, so therefore I can own 3 of these things. And probability is I'm going to capture a large part of this. And maybe I'll adapt in due course. It's don't overforce the narrative. Just be broad, be open, and always be learning, as you rightly said, because we don't know. This is all new, and it's happening at lightning speed.
The next step for Bellatrix will be the Paris upgrade, which boots off the miners to finalize the merge. That upgrade is set to happen next week. The merge has been on Ethereum's roadmap since the blockchain's inception in 2015. Despite multiple delays in the past several years, crypto investors are betting on the merge finally happening this year based on developers' updates and a few successful test runs earlier this year.
And macro investing is all about being open-minded to other possibilities. So once you learn the trick that it's okay to say you don't know, but I think this might be how it plays out. So you think in what's known as probabilistic terms. Then for that to happen, for you to say, look, I think there's an 80% chance that Bitcoin over the next 5 years is going to $250,000. That's a reasonable odds. What's the 20% chance that it doesn't? Okay, so you need to have both of those things in your mind at any one stage and be assessing them. I learned that from the book. I think it was The Alchemy of Finance by George Soros, who was probably the most famous of all of the macro investors. And he would talk about this a lot, that you have to have these kind of logic trees of probability trees. And once you understand that, you can even bet against yourself, which is really hard to do, and I can't do it. But some of the best traders can be, long the S&P. They think the S&P is rising, but then they think the odds of it falling are getting higher, and they start selling against themselves. It's like, it's very hard to do. But that kind of investing teaches you to keep an open mind, because you're looking at the whole world, and you have to know that we don't know the outcome. And anybody who tells you that they know what's going to happen, it's just a fraud.
So, are you prepared for a global recession? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.